Business buyers pay too much and sellers don't get enough because they don't know how to value a business. Valueabusiness.com.au. You might only get one chance to get it right. So how do we value this thing called a startup business? Generally, whilst all business valuation is part art and part science, valuing a business with little or no history is much more art than science. And whilst all business valuation looks to the future, that is especially so with a startup because it will have little or no past to go on. There will be little goodwill, no pattern of income, just some assets, maybe an idea, and a market assessment of where that idea might go. So how do we value such a business? The biggest determinants of a startup's value are the market forces of the industry and sector in which it plays, which includes the balance or imbalance between demand and supply of money, the recency and size of exits in this particular industry, the willingness of an investor to pay a premium to get into a deal, and the level of desperation of the entrepreneur looking for money. However, the assets of the business also can determine the value of a startup business. Valuation in this area can be the most hazardous and challenging of any area of business valuation. Sometimes it can be the valuation of an idea, the picking of a trend, basically a punt on the future. So what are the ways then open to us to value a startup business? Well, firstly, a cost approach attempts to measure the net value of the business today by calculating how much it would cost for a new effort to replace key assets, commonly called the cost to create approach of valuation. It's one of the best ways to value a startup business, but it will probably lead to a low valuation. Not so much blue sky here. Since there is little or no income, a valuer will often use the discounted cash flow method to forecast and value future cash flows and bring them back to their present value today. And finally, a popular method to establish the value of any startup business is to search for similar companies that have recently received funding or been sold. This is called the market approach. So why do we need it all to value a startup business when you're not selling it? Well, whether you are selling, buying, or running your business, it is always good to know the value of it. Valuing a startup business when you are running it helps you to know the strengths and weaknesses of your business and can help you in maximizing your profit and hence your value. What's more, you never know when you need extra debt or equity finance. To sell equity in your business, you need to know the total value of the business. If you have an exit strategy and a target price, you know how far short of that price you are if you know the current value of your business. For advice on business valuation, contact BCI Business Brokers on the contact details on this screen. And for help in maximising your business value, take a look at our products here, bc.com.au/maximise. And for a free consultation on the value of your business, visit our website, valueabusiness.com.au. Valueabusiness.com.au. When you want to know what a business is worth.